Welcome back, traders, to the second class of our trading journey. Here, I'll talk about a certain set of rules that you must follow for the next few days. And trust me, if you stick to this exercise, it will change the way you look at the market. The first thing you have to do, we'll start with a simple exercise in this class, and later, we'll analyze what really happened. So here's what you'll do. Mark your days as day 1, day 2, day 3, and so on, up to day 10. You'll do this exercise for at least 10 days. Then, under each day, write your trades. First trade, second trade, and third trade. In a single day, you can take up to 3 trades. That's your maximum. If your first trade stop loss isn't hit, stay in the trade for the entire day. But if your SL is hit, you can take another trade, this time in the opposite direction. And if you still want, you can go for the third trade, but never more than 3 trades a day. That's the rule. Now, in your sheet, write whether the trade was long or short. That means, did you buy, going in the upward direction, or did you sell, taking the short side of the market? Then, note down your risk-to-reward ratio. Our goal here is simple. Minimum risk to reward must be 1 to 2. You can trail wherever you want, but you must cut the trade if SL is hit. This is very important, traders. You have to protect your capital. Stay in profit, but always cut your losses. That's what we mean by risk to reward discipline. Next, write down how many points you've captured. We'll be using stocks for this exercise. So, suppose you captured 20 points. Write 20. If your stop loss was hit, write -5. Simple. Then, mention whether it was a profit or loss day. Just write how your trade went, what happened, what you learned. Simple, right? Now let's move ahead. Let's talk about how to enter the market and how to mark the trades. Let's go to the chart. Currently, I'm on the Bitcoin chart. But for this exercise, type AMD and select AMD. Now, set the time frame to 5 minutes. You'll find it in the time frame section. Just select 5 minutes. All right. Here's our plan. There's no rocket science here. You don't actually have to trade. You can do dummy trading or paper trading. If you're not trading live, just mark your trades on the chart. Here's how you'll do it. Wait for the first candle to close. Once that first candle closes, mark its high and low. Now, if the next candle breaks the low of the first one, you'll enter a short trade. Mark that position using the short position tool. We'll take a minimum 1 to 2 risk to reward, and you can trail the trade if it moves in your favor. Wait patiently for your target. If you're trading with real money, don't use this exact setup. Stick to your strategy. But for dummy trading, just mark your trades and record everything in your Excel sheet to see how your strategy performs. Now look here. In this case, our SL wasn't hit, and it gave a huge profit. So, no need for a second trade today. Let's check the previous day. We marked the high and low of the first candle. The second candle broke the low, so we entered here. But after a few candles, it hit our SL, and that's our exit. This trade was a loss. Now when do we take the second trade? It was our first trade that failed. Now, if the market breaks the high of that same candle, after closing above it, we'll reverse our trade and go long. Or if it again breaks the low, we'll go short again. That's your second entry. Mark your SL, note it, and move to the next setup. It's just an exercise, so you can keep your SL flexible and observe how it behaves. Now, let's go to the next day. Here's the first candle. Mark the high and the low. The moment it breaks the high, we'll enter the trade and hold it for the whole day. And that day, it gave a massive profit. So, Just follow this simple rule. Maximum 3 trades a day. If your trade is in profit, hold till the end of the day. If your SL is hit, exit immediately. Then look for the next opportunity to enter. That's it. Do this exercise for 10 days straight. Don't use real money. Just mark your positions, track them, and observe the market. Because the market always teaches. Only if you're willing to watch and learn. See you in the next class, traders. And until then, stay disciplined, stay consistent, and keep learning.